Good morning and welcome to TOITOI Japan Market Radio for Friday, January 24, 2026. I'm your host coming to you from Tokyo. This is your daily briefing on Japan's equity, currency, and bond markets, designed for global investors tracking Japan exposure. Joining me today is our portfolio manager who focuses on Japanese macro and equity strategies. Let's start with the market summary. What's the picture today?
Thanks for having me. Well, the Japanese market was closed today due to a public holiday, so we don't have any price action to report on the Nikkei 225 or TOPIX. That said, there's been plenty of news flow overnight and this morning that's going to shape the opening next week, so we have a lot to unpack.
Absolutely. Let's dive straight into the corporate side. One of the bigger stories is an analyst upgrade on Mitsubishi UFJ Financial Group. UBS has moved MUFG to a strong buy rating. What's your take on this?
This is a meaningful upgrade, especially coming from a major global investment bank like UBS. MUFG is Japan's largest banking group and systemically important to the domestic financial sector. When a Wall Street analyst moves to strong buy, it signals improving confidence in the profitability outlook, capital adequacy, and the overall credit cycle in Japan. It also suggests that the normalization of rates in Japan is being viewed more favorably for bank margins than perhaps the market had priced in earlier.
And what does that mean for the broader Japanese equity market, particularly the indices?
MUFG carries significant weight in both the Nikkei 225 and TOPIX, so any positive reassessment can provide a modest tailwind to the indices. More importantly, if other analysts follow suit and start upgrading Japanese financials, we could see a broader revaluation of the sector. The financial services subsector has been somewhat unloved compared to exporters and tech, so this could be a catalyst for rotation. From a yen perspective, it's a marginal positive. If foreign investors increase allocations to Japanese financials, that creates incremental demand for yen-denominated assets. On the JGB side, the direct impact is minimal, though if the upgrade reflects confidence in stronger domestic growth, that could support a steeper yield curve over time.
Staying with the yen theme, there's been a lot of chatter about potential intervention. Bloomberg is reporting that speculation is mounting that Japan may intervene to support the yen, possibly with coordination from the United States. How seriously should investors take this?
Very seriously. When you start hearing intervention talk, especially with references to potential U.S. cooperation, it means the authorities are likely concerned about the pace and level of yen weakness. A persistently weak yen raises import costs, particularly for energy and raw materials, and that feeds into inflation and squeezes household consumption. If the Ministry of Finance and the Bank of Japan decide to act, and especially if they have U.S. backing, that would be a significant signal.
What would that actually look like in the market?
In the near term, you'd see stabilization or even a reversal of recent dollar-yen moves. If intervention is confirmed, we could see a sharp rally in the yen as speculative short positions unwind. For equities, the impact is more nuanced. Exporters have benefited from yen weakness, so a stronger yen is a headwind for those names. On the other hand, importers and domestic cyclicals would get some relief from lower input costs. Financials might underperform if the yen strengthens quickly. On the JGB side, intervention could actually push yields higher if it's seen as part of a coordinated hawkish signal from the BOJ. Markets might interpret it as the central bank moving closer to tightening monetary conditions further.
So investors should be watching for any official statements from the MUFG or the BOJ.
Exactly. Any coordinated messaging from the G7 or bilateral statements between Japan and the US would confirm intent and likely drive near-term yen strength. This is something to monitor very closely over the weekend and into next week's open.
Shifting to the geopolitical side, there's a notable development out of Washington. The Pentagon has indicated it will take a more limited role in deterring North Korea. What does that mean for Japan from an investment standpoint?
This is a significant shift, and it has direct security implications for Japan. Japan has relied heavily on the U.S. security umbrella and extended deterrence to counter threats from North Korea, including missile and nuclear capabilities. If the US is scaling back its deterrent posture, that forces Japan to accelerate its own defense buildup, including potentially acquiring offensive strike capabilities, which would be a major policy change. It also raises questions about the credibility of US defense commitments in the region, and that creates uncertainty.
How does that translate into market impact?
In the near term, you'd expect some risk-off sentiment. Geopolitical uncertainty tends to weigh on equities, particularly cyclicals and export-sensitive names. Defense contractors in Japan could see a boost as the government signals faster increases in defense spending, but that's a narrow segment. For the yen, the effect is a bit paradoxical. On one hand, risk-off flows could weaken the yen. On the other hand, heightened regional tensions sometimes drive safe haven demand for the yen. I'd lean towards safe haven demand being the dominant factor if tensions escalate. For JGBs, you'd likely see yields move lower as investors seek haven assets. 10-year yields could face downward pressure despite the longer-term fiscal implications of higher defense spending.
So it's a complex picture where market reactions could move in different directions depending on how investors interpret the risk.
Precisely. The key will be whether Japan responds with concrete policy announcements on defense spending and strategic autonomy. If the government signals a major acceleration in rearmament, that could shift the narrative from pure risk-off to a more structural fiscal story, which would have different implications for yields and the yen.
Let's pull this all together. For global investors tracking Japan, what are the main themes to take away from today's briefing?
I'd highlight 3 things. First, the upgrade on MUFG suggests that the financial sector may be entering a period of revaluation, and that's worth watching for portfolio positioning. Second, the yen intervention speculation is a major near-term risk factor that could drive sharp moves in currency and cross-asset volatility. And third, the Pentagon's shift on North Korea introduces a new layer of geopolitical uncertainty that investors need to factor into their risk assessments for Japanese equities and fixed income. All 3 of these themes are interconnected and will likely dominate the narrative when markets reopen next week.
Great summary. If you're a global investor following Japan's markets, we hope this briefing has given you the context you need heading into next week. Consider subscribing if you want daily updates on Japanese equities, currency, and rates. Thanks for joining us on TOITOI Japan Market Radio. We'll be back with you next time.
Thanks for having me.